finance should be treated as a key strategic priority and not an afterthought. Nine out of 10 startups fail, and it's not because of the product or the ideas. It's the money mistakes that they make. And these mistakes are very common. Hello and welcome to the Executive Insight series at Inc. Nigeria. I'm Becky Charles. I lead the finance function here at Inc. Today, I'll be speaking directly to business owners, to founders, startup CEOs, operations leads as to why small businesses fail. And these are the financial mistakes that are responsible for these failures. Financial mistakes. Let's begin with the simple truth. You cannot grow what you don't track, and you can't sustain what you don't understand. So if you're not tracking, then you're actually guessing. And when you're guessing, best believe cash is bleeding out in some places that you don't even know about. Finance is not just about balancing the books, preparing the accounts for tax or audit. It's about making data-backed decisions, building a structure, and ensuring that the structure is strong enough to ensure the survival of the business. Now, most founders think about finance as an afterthought because then you have your product in place, you have your marketing in place, product in place, sales in place, but finance comes in as an afterthought. Now, finance is not an afterthought. Finance is a business enabler. Finance helps you to put the structures that are required in place to drive the process, to drive the business into profitability. Let's go through some of the most common mistakes I've seen. It will be poor cash flow management. Now, most businesses are unable to track their cash flows, inflows and outflows. Right now, Greg Savage would say, revenue is vanity, profit is sanity, while cash is reality. Now, the moment you're able to track your cash and know how it comes in, where it goes to, what you have in your bank, then I think you're on the right path to success as a company. Another common mistake is no budgeting, no forecasting. Now, operating without a budget or a financial forecast is almost like driving with your eyes blind, and you can imagine where that will lead you to. So financial planning is essential to drive the business to sustainability. Now, when there is no planning, you're just reacting and you're not effectively managing. So it's like you have a business, you want to start off a business and then you don't have any plans for product, you don't have any plans to where you get money from, as to where you'll be buying from. You're almost going to fail. You're just setting yourself up to fail. So more often than not, when you don't have plans for your business, especially the financial part of it, you majorly be reacting to issues when they come up as opposed to managing them when they come up. Ignoring taxes and regulatory compliance. Now, this is a very common mistake with startup companies. They ignore their taxes until the regulators start coming after them. They ignore VAT filings, withholding tax, payee, company income taxes, and because they think they can avoid it because they are very small. That doesn't exempt you from paying your taxes or being compliant with regulatory requirements. So the goal is to, if you cannot do that for yourself, you get a consultant that can help you with your filings and ensure that you're compliant. Because when the penalties come, they come with interest. I don't think any startup wants to deal with that, even in their 4th, 5th year while they're growing. All right, so the final mistake I'll be giving you today, although the list is inexhaustive, right? So the final mistake I'll be giving you today would be unclear pricing structure. Now, a lot of companies do not know how to price their products. They don't understand the unit economics that comes with pricing the products. They can't even determine what the gross margins are or the gross profit is, or ascertaining what the cost of sales are, right? Now, if you cannot price your product properly, then you cannot be profitable with your business. So first things first would be to understand the product dynamics, the unit economics, and learn how to price your products better so that the company is not bleeding out cash from elsewhere. Now we'll be discussing the hidden cost of financial neglect. Now, you don't just lose money when you do not manage finance properly, you lose opportunities. What type of opportunities? Your investors walk away because then they cannot actually look at your books and make sense of it. Team members are frustrated when payment of salaries probably delayed. Product is frustrated because you're unable to meet up with making payments for the requirements in terms of what your business is doing, the products that are required by your customers and the likes. And then there's time wastage, especially when you have customers or clients who are awaiting products and services from your end, but you're unable to make payments to your creditors. Now, all of these are the hidden costs that could affect your business because finance is not properly planned and managed. All right, simple ways to avoid these financial mistakes. The first one will be using basic tools like Excel, QuickBooks. If you cannot afford ERPs like Sage, Odoo, and whatnot, you can really start small, especially if your business is small. So you can use Excel to track properly. You can use QuickBooks as well. There are other ERPs that are very friendly, user friendly, that can help you manage your reports properly. Another one is, even if you cannot afford a full-fledged or a full-time finance professional, you can engage the services of consultants, right? They are going to be very helpful in ensuring that you manage, monitor, and track your books properly. Then you also have to ensure that you have a simple budgeting tool, even if it's on Excel, where you can track your expenses, track your payments, track your revenue, that's the sales that you make, and how it comes in, and every other thing that you do. It helps you to be able to put a lot of things in perspective, especially financially. Again, you need to be able to monitor your margins. Quite a lot of businesses do not know how to properly calculate their margins. So, like I said earlier on, even if you do not know how to do that, or you're unable to engage a full-fledged finance professional, you can have consultants come in to help you track these margins. Before you decide on whether you're going to take up this deal or not, you need to be able to compute your margins and make sure that these margins make sense. Finally, you need to be able to keep your records. Record keeping, especially in small businesses, are usually trivialized. Like, people don't even think it is necessary or proper to keep records. Sometimes when these businesses go to obtain loans from the bank and they ask them for their receipts, support documents, they don't even have anything to provide, right? So as part of the things that you have to put in place to minimize these mistakes, you have to ensure that you keep proper records of your receipts, your invoices, support documents. When the auditors come and the tax or the regulators come, they're actually asking you for all these support documents, and your inability to provide these documents means you have to pay more in liabilities. You have to start looking for how to make up for source documents or support documents. Sometimes you will have to bear some sort of write-offs because you're unable to provide support documents or source documents as required. Let me leave you with a few key reminders. Finance should be treated as a key strategic priority and not an afterthought. It cannot be the last thing you're considering when starting your business. It's actually one of the foundational pillars for your business, so it's not an afterthought. Build good finance habits now. Even though you're not making a lot of money, right? Start engaging that consultant, start engaging the finance professional, start preparing your budget, start reviewing your margins, your payables, your receivables. It is very essential. Start building those habits now. Have trackers that can help you review all of these things one after the other, periodically, monthly, quarterly, half of the year, and end of the year. Finally, investors fund structure, not chaos. They fund readiness. So they are looking at your ability to have your books, to put your books in order. They are looking at your ability to provide structure. They are looking at your ability to create processes that can deliver sustainable growth over time. Thank you for watching this edition of the Executive Insight series at Inc. Nigeria. So if you're a founder, a business owner, a startup owner, I hope that this series has been very insightful and you have learned one or two in how to manage your finances and how you can avoid these common financial mistakes. So if you've made these mistakes before, not a problem, The good thing is that you've been able to identify these mistakes and then you can move forward by correcting these errors. Let's build smart businesses, let's build resilient businesses, and let's think finance. Do well to like, share, follow, and leave a comment on all our social media platforms. Thank you.